This is our Forex blog for June 19th, 2012. And like we do most days, we buy the strongest currencies versus the weak and sell the weakest ones versus the strong. This is our sortable currency meter, which allows you to link each of these individual currencies to a quote sheet or hot list, and then sort it and see the strongest ones on the top and the weakest ones on the bottom. The Swiss, very strong right now, then the Euro, New Zealand, and Australian, and the dollar and yen are the two weakest ones. The real-time trend is in histogram format. This is made up of 5 different statistical trend tools. 3 of them measure the direction. In this case, the Swiss is moving versus all the rest. And 2 of the 5 measure the intensity. So anytime the majority of Swiss pairs earlier yesterday were going down, and going down with a lot of intensity, it's going to be at and above this dotted 80 line right here. Underneath that, we have the 15-minute trend, hourly, daily, weekly, monthly. The more time frame trends that line up, the better. If you're just scalping, then you really only need the real-time trend. Hopefully the 15-minute and hourly would be nice. In a perfect world, you have pretty much all the trends except the monthly. The monthly doesn't matter. You can use that to bet bigger in some circumstances than others. Earlier today, and actually for most of the day, the Australian was one of the strongest ones, and especially after around 6:30 right here, both maybe 5:30, 5:15 for the dollar. The Australian dollar is what you want to look to buy. We have a 3-step easy Forex trading system. 1, identify which currencies are most likely to go up or down. Watch those currencies, look for buy signals on the strongest currencies and sell signals on the weakest. You get in when it breaks out above or below the bars high or low when the signal happens, or you can use a trailing stop to get in and out, and also fib targets. So let's bring up the Australian dollar. This is one of the stronger ones. And you can see that this was above the hourly moving average. We have a Fibonacci area right here, Fibonacci retracement area, Fibonacci profit targets up here. I do these each night so you don't have to. And the upper white band is usually most days the maximum high, and some days like today the market stalls out at the 1.5 red containment band pretty much the entire day. So obviously with this as your profit target, the closer to the middle of the range you can look for buys, the more potential pips you have. You have a buy signal right here. Basically you enter that when it goes 1 pip above the bar's high, or if you wait for the trailing stop, you got in at 27 versus 21, you had to pay 6 pips higher price. You got in right here at 21, you're out at 37, you made 16 pips. You wait for a pullback, and you can see a bunch of buy signals right here. When it's in the middle of the range and the trailing stop's just right above you, usually it's better to just wait for that. You get in this trade at 24, out with a small profit, and again right here at 33, and that one really took off, and you got out at 63, you made 30 pips. And it's really up to you whether you want to take each trade or not. You have the real-time momentum. This went up with decent momentum, and then on the way down it fell with decent momentum. As it's going sideways right here, there's not that much weakness. So when it breaks out, this was a pretty high probability trade. The same thing here. It broke out with more momentum than during the pullback. It only had 1 bar of weakness. This bar right here had very little weakness, and then it went green. You buy the breakout of that, and as soon as you're in the trade and you see a lot of momentum come in, it's very likely to go up. The whole key to trading is small losses, big wins. If you have 5, 6, 7, 8 pip losses and 10 to 30 pip wins, and you're right half the time, or even 40, 45% of the time, you should do well trading. And the whole reason for the currency meter is that you're more likely to find those explosive trends. One currency that was pretty strong from about, let's click on it here, 906. The 15 and hourly trend were down. They shifted up a little bit around 930 right here. The hourly shifted up. It was one of the strongest ones at the time, other than the Australian, was the Euro. So you could look for, around 930 Euro dollar buys. So here's 930. There's a buy right here. Pullback, hits the trailing stop, you're in at 19, and it got you all the way out up here at 99. Huge 80 pip win. Obviously one nice trade like that a week gets rid of a lot of the stupid trades you take that you sit down, too many traders are bored, they can't wait to get into a trade, and they get in too soon. Our range charts and our intelligent trailing stops do an excellent job of getting into trades and keeping you into them. Some of our traders have been emailing me and telling me they're having good luck with longer time frame charts. I look at a quote sheet of the symbols and then the average daily range, how much average true range, how many pips a day do they move, euro dollar about 121, so 11, 12, 13 pip per bar range chart makes sense. And then with our intelligent trailing stops, you can see it flips a lot less. The number of flips today was 1, 2, 3, 4, 5, 6, 7 flips today with 11 pips per bar chart versus 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. So it's a lot less direction change. And a lot of people have been telling me that they're using longer time frame range charts and our intelligent trailing stops. And if they have a loss, let's say they do one lot here. If they lose, they'll do 1.5 lot in the second trade. If they lose again, they'll do 2 lots. You know, you get, if you have a couple losses in a row and you have a big position size and you catch one of these, 100, 150 pip moves on 2 times bigger, on 2 lots, let's say you get a 100 pip move, that's $2,000. If you lost, 8 pips with one lot, that's $80. Let's just say 12 pips with 1.5 lots, $180, right? You're $240 of losses. And let's just say you double that at $500 of losses. You catch one big win with a big lot size. You still have $500 at the end of the day from doing that. And a lot of traders only have smaller accounts. You got to do 1 mini lot, 2 mini lots, 3 mini lots. But that is an approach that I oftentimes take, especially when scalping. If I know I'm going to sit down, take 3 or 4 trades. If I have a loss and I see a really good trade, I'll trade larger lots to get my loss back, plus have some money at the end of the day to make it worth waking up early to trade. If you missed that earlier trade, you can see you had a nice 3-bar pullback right here. This was one of the stronger ones. Explosive momentum on the way up, very little weakness right there. The 15-minute and hourly trend were up as of like 5 o'clock, and the daily also was up. And the monthly switched up soon after, or right around that time. So pretty much all the time frames you care about, except the monthly, were up at that point. And you can get into these trades and use a trailing stop, or you can, get into this trade and draw your fibs off of this wave here and get out the first or second fib target. Rarely do markets go above the 2.0 level. Now the yen was also weak today, so you could have also traded the euro yen. This is yesterday here. Let me scroll over to today. You can see that this also, most of the time frame trend shifted up at 6. The daily trend shifted up a little bit before 9. We have a buy signal right here. If you got into that trade right here, you'd have a loss. This is what I mean by, trading more lots on your second trade after having a loss. If you got into this trade right here at 93, notice the trailing stops above you, monthly pivots above you. It's already gone up, sideways up. I prefer to have a deeper pullback than this. When it pulls back, comes down again, there's no weakness right here. What a great trade right here. In at 87, the trailing stop got you out here at 27. So it's about a 40 pip move. And you can also draw your fibs off the previous wave and use somewhere between the first and second fib target usually is the end of the move. This is also a Fibonacci retracement level that I draw each night, spend 30 or 40 minutes, 45 minutes, so you don't have to. When these levels are right near the white containment band, usually it's the end of the move.